A lot has been happening on the markets, as you know, that's an understatement. In this video, we're going to talk about all of it. What happened in the markets, what's going to happen now, and then the big thing that happens. And we're going to talk about gold, we're going to talk about unemployment, we'll talk about the stocks that took the biggest hits and what to expect. We get into all of it right now. And I have to give you a warning that at the very end of this video, I have a very disturbing video. It's a digital statement, basically. We'll get to it, but I'll warn you before it comes on. I'll tell you to get the kids out of the room. But that's at the end of the video, not to get you to watch the whole video. It's at the end of the video so that some people don't have to see it. And we're already seeing a rebound in the markets today. People are getting spooked because of the degree or the magnitude of the fall. It scared a lot of people. I always tell you that's what I'm talking about with the speed of the decline or increase is more important than the destination, the angle of the trend. And it came down so much so quickly. If it had done that over 3 months, nobody would have been scared. It did it over a day. But everything came down, and as you and I have talked about before, everything comes down when people are panicking, and that includes gold mining stocks, silver mining stocks, even precious metals prices. And that was to be expected. And you're seeing a resiliency or a strength of gold falling slower and slower. But I always tell you, don't worry about gold. And even the other day, it dropped, what, $40 an ounce, which sounds so shocking. Even more than that, I think. But it doesn't matter. You don't worry about gold itself. The commodity will always be fine. And the companies that mine for that commodity always base their stock price on the earnings that they derive from the product they dig out of the ground and sell. And as it gets more expensive, people are more likely to pay more for the shares of those companies, even as all other stocks go down lower. Gold prices will recover, rebound, and they'll continue to climb counter-trend to where the overall market is going when we have the big crash. But first, the markets, as I said today, Dow Jones last I saw was up 350 points, about 1%, just under. And you'll see a bit of a recovery, a bit of a rebound for perhaps a couple of weeks. My opinion is that then that will be the period of getting out if you haven't yet. Getting out of the high-flying stocks that I keep telling you guys to get out of. The Magnificent Seven, you don't want to own those. Not in your 401k even, or your mutual funds. You might not realize you own them. There's so much downside to come, as is prophesied by the Q ratio I always refer to, the Buffett indicator, by any kind of metric, the historical price-earnings ratios, the overall economy is a little bit spooked right now. People are suffering. They're having a hard time paying their bills. Inflation is coming down, but interest rates have yet to come down. And as I've told you before, and I'll show you a chart here to prove out what I'm saying, as interest rates come down, that is often when the recession begins, give or take a month or two. The recession starts, maybe then they lower interest rates, or they lower rates, and the recession starts. And you're hearing all about this intermediate interest rate emergency rate cut. Maybe it happens, maybe it doesn't. If it happens then, that's when it's going to be more likely the recession will start earlier. So careful what you wish for. Everybody's baking it into the pie, and that's the risk here. That's why the market's starting to recover, because people are believing and baking in that there's going to be a rate cut, and even they're expecting an emergency rate cut. And so all of a sudden the stocks are starting to go back up again. But this is what I would describe the next couple of weeks as this happens. This is the window of time, the last exit, the last stop on this train. You need to get out of the way of this train wreck right now. And there's a gift in the stock market right now, whether you want to get involved with the gold or silver mining companies or the commodities, both of which are a gift. And look at oil. Oil prices are dropping significantly. As we talked about in the oil spike and fade video, oil prices will be subject to spikes based on macroeconomic events like war. And overall, they're going to be continually pulled lower as the economy slows down worldwide. And oh my goodness, everyone's realizing now that, wait, there is going to be a recession. And oh wait, the stock market may be a little bit frothy. Anybody watching these videos, you and I, see things in a very different way. And we avoided a lot of the downside in the big downdraft in the market over yesterday and the last week because you're not heavily invested in these highly speculative, overvalued mega companies. The Magnificent Seven, you don't want to own those just because they're going up. This is how the 1929 stock market crash began. Low breadth of stocks were responsible for all the gains. A small group of stocks outperformed so much and it pulled up the entire stock market. That's what a lot of these stocks are doing. Magnificent Seven stocks are pulling the whole stock market up for so long now. And now people are realizing, wait a minute, are these stocks worth this? Is there downside risk here? And all of a sudden, they realize there is. And now the recovery is just the second to last act. Stocks will start recovering a bit tomorrow, next day, throughout the week, through the next couple of weeks. Then that's, in my opinion, and I can't give you personal investment advice, that's when you're definitely going to want to get out of this stuff. And if you haven't listened to me before, of all the times that I've been explaining that all of this is going to happen, if you haven't listened yet, why would you listen now? I'm talking right now to new subscribers, so maybe they're here for the first time. They need to know. You know, what I've always talked about with you, and it's playing out, it's going to play out now, and it definitely already is north of the border. You're going to see real estate starting to be under pressure. There's more inventory now. There's more desperation. There's lower rates. There will be a lot more activity in the markets. And as the stock market goes down, it takes out some wealth effect. It's more likely that then also real estate prices will come down with it. At first, when everybody's not sure what's going on, you see a lot of red on the screen. Prices of everything comes down. There's margin calls. There's people panicking, selling this and that. Then what happens is that things that are highly undervalued, in demand still, things like gold being bought up still, prices drop. The central banks all over the world, mostly in Asia, buy even more. The price is a discount. And now there's a lot of talk about quantitative easing coming up. And what that means is that there will be a deterioration of the purchasing power of the US dollar. If there's only 100 US dollars, each dollar is worth a tremendous amount. If there's 29 quadrillion, each dollar is worth such a smaller amount, which is why the US dollar has lost about 98% of its purchasing power. And people are talking about why did this happen? They're trying to explain why this has happened. A market that is clearly frothy and overvalued and driven up by a small select group. Of course, this could happen without everything they're talking about, but they need to find a reason. Weak earnings coming out because we are in a recessionary environment. I'm not saying we're in a recession right now, but it doesn't matter. People always have to point out to the exact thing like, well, now technically we are in a recession. That is technically a correction. Don't think of it like that. Just think about the economy's here and it's going lower. And at some point it's going to be declining. It's going to be shrinking, but it's just a trajectory where it gets a little bit worse, a little bit worse, a little bit worse until it turns around and then everything gets better and then a little bit better and a little bit better. Think of it that way. Don't worry about the official definition of, yes, we're in a recession, because the powers that be decide that, well, that's what a recession is, this and that, but it doesn't matter. It's just a shrinking or a waning of the economy. And they also point to the carry trade unwinding. Basically, everyone's doing a bad job explaining it. Just think of it like this. You want to borrow US dollars, so you borrow that money in Japanese yen because they have lower rates. You take that money, convert it into US dollars to buy what you're going to buy. And then you don't have to pay money on the debt that you borrowed because you borrowed at such a lower rate. And why it's unwinding is that the other day, the Bank of Japan surprised everybody and raised rates. Makes the Japanese yen stronger. And that's the reason the US dollar fell very strongly that day. It was in relation to the yen. And if you remember, for so long you guys were gaslit and lied to about how strong the economy was. And now everyone's realizing that what we've been talking about, what you already knew for so long, is playing out, and it surprised everybody because I told you they're all looking this way and it's going to hit you from that way, because it was the President Biden specifically who continually talked, and a lot of other talking heads, about how strong the economy was. And they point to the low unemployment rate and the strong stock market. And what we talked about then, and this is why you should subscribe to the channel if you haven't already, just take a minute right now and click on the subscribe. It'll help us. It'll be great for you. But what we said when we were talking about it was that high stock market, low unemployment, and they say that's why the economy is strong, both of which can change in a minute. And guess what? As I've been showing you, the unemployment rate is climbing higher and higher now. And stocks are coming down a little bit. Nothing dramatic. It felt dramatic because it happened really quickly. But it's not even that significant in the grand scheme of things. Look at gold prices came down. But look at a longer term chart of gold. How is it doing? And then you see the mining stocks going on discount, bargain sale prices. And the other day when the markets were coming down so harshly, yesterday, of all the stocks bleeding that day, what stock went higher in price? Victoria Gold by about 9% or something. They had a massive landslide and it fell into their cyanide pits and cyanide water got everywhere. Big, massive accident. And they've fallen strongly recently, but I just thought it was so ironic. And what we've talked about before, about the Q ratio and the stock market overvaluation, is that the downside historically was about 85 or 90%. Is it going to be that bad? Who knows? But the point is, I'm just relating it to what has happened. What has happened before when the Q ratio gets to extreme levels above 1.0 as it has, and then there's always a stock market crash within a number of years after that. This is now the point where I believe it's going to begin after a few weeks of a little bit of a recovery bounce. But then we're going to get up to the point when the Federal Reserve does lower interest rates, and that's in August 17th and 18th is their meeting. They're widely expected to cut rates by at least half a percentage point that day. But this is going to be a massive buy the rumor, sell the fact event, in my opinion. I believe as soon as the Federal Reserve lowers rates, that's going to set off the recession. It's going to set off a little bit of a panic. But if you're listening to me, you'll be out of all the high-flying stuff by then. Any kind of AI company, a lot of these, I won't even tell you. Every stock is doing not as good as you think. Without the Magnificent Seven, the vast majority of the rest of the market is trading about where it was a year ago. Meanwhile, I was talking about the Buffett indicator. His Buffett indicator just hit an all-time high. What did he do? He sold half of his stake in Apple, and that raises his cash position, which is what you should be thinking about too, cash position. There's going to be so many bargains. And I'm not just talking about stocks, I'm talking about your neighbor's house. But his cash position now for Berkshire Hathaway, $277 billion. It's a lot of cash. But who's going to win in this very moment right now is the people who have the cool heads. You don't panic. Don't see the stock market come down hard and then say, okay, I'm not going to invest in stocks anymore. I'm going to sell stocks. And you freak out and you join the downdraft. Those people generally regret their decisions early on. Cool hands, cool minds are going to prevail in this moment. It'll make you feel better to see the stock market go up for a couple of weeks. And then you can take your time, relax, and not worry about things, because in that time, hopefully, and I can't give you personal advice, I would suggest, in my opinion, that you take that opportunity, that gift, to unload a lot of the stocks that you have that aren't going to survive what we're all going to be experiencing in a minute. And you notice I haven't even talked about the war yet, and we're going to get to that. Actually, why wait? Let's get to it right now. And I warned you earlier, I'm going to warn you again. You know what's going on with the vulnerable, innocent people in this war. And I'm not taking a side. I don't want to have a horse in this race. And silence is violence, sure, but this is not my fight. This is not my hill to die on. I just feel so bad what I'm seeing about the people who are innocent. And I don't agree, and I'll say this, I'm not against Israel, but I don't like Netanyahu at all. I think that you don't need to see a Hamas fighter and then take out 33 children to get him. Meanwhile, they took out a guy in one room in an enemy country in Iran, in Tehran, the capital, took him out the other day, and they can take out one guy and his bodyguard in one room. So specifically, and then you go to Gaza, and they're just targeting journalists. Children are starving. This is definitely, clearly, to anyone watching, a punitive response to one of the most horrible, horrific events that's ever happened. And that's why, even though I don't know if people will like this or hate it or unsubscribe or whatever, I just felt, and I thought maybe I would see how it feels and maybe cut it out of the video. And if you see it, then it means I didn't cut it out. But I just want to do something with whatever voice I have. And I just had this thought of a split screen of Benjamin Netanyahu in what he's doing at that very moment. This is Benjamin at the White House a few days ago. After everything, a few days ago. And this is what's going on at the same time. And I'm so sorry. Get your kids out of the room. Maybe don't watch it. It was very disturbing.
Jesus Christ.